What's interesting is you have all these possible triggers of bad news, but it's the high valuation which I find incredible. This is a rare combination, right? As I said, by the time we were very late in the Depression, 1940, 41, these were still Depression years. Interest rates were at record lows. We still had slight deflation. I mean, these unemployment was still barely up in the double digits. So those were low valuations, right? When trouble hit. This is going to be trouble hitting at very high valuation. This is exceptional, even for a fourth turning.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Today's guest has long predicted that widespread systemic change would occur during the 20-teens and 2020 as America and much of the rest of the world experience a replacement of the old order and the birth pangs of a new one. All of us who have lived through this period, and especially the year 2025 that just ended, probably find it hard to argue that massive change, culturally, politically, geostrategically, and economically, is indeed now afoot. So, how much more of this change still lies ahead? How disruptive will it likely be? And what kind of new system does it look like we'll have on the other side? For perspective, we've got the privilege of welcoming back to the program demographer Neil Howe, co-author of the seminal book, The Fourth Turning, and author of its sequel, The Fourth Turning is Here. Neil, thanks so much for joining us today.
Great to be here, Adam.
Thanks, Neil. Hey, first off, Happy New Year, Happy 2026. Hope you had a great holiday season.
I did. No real snow up here yet, so that's about all I can be thankful for.
Yeah, well, be thankful for it. I moved to Nevada since the last time we talked, and we have had our fair share of snow of late. So it's pretty, but it's also pretty cold.
You live in the east, west, Las Vegas?
Nope, I'm up in Reno, so I'm in the northwest, right, literally right on the edge of the Sierras.
So I grew up in California, and we used to hike into the High Sierra. I was from Owens, in the Lone Pine, that
Oh,
area
wow.
there. So I'm very familiar. It's also where they interned the Japanese, right?
Yeah.
It's a beautiful area, though. I would just voluntarily move there. I mean, Ansel Adams did those wonderful black and white photos of the Sierras from the eastern side, right? They go up like a cliff.
It's gorgeous out here, and as this audience has heard me sort of gush over the past 2 months or so, like every day I find out something new and wonderful about this area. It's been such a hidden gem. So yeah, Neil, if you're ever back here, I'd love to host you, and you can take me on some of your favorite hikes.
We can go up to 12,000 feet together, Adam, and see,
I would love that. I suspect that there's probably more than a small number of people watching this who'd love to come join us on that event too. So maybe we make
that's a germ of an idea.
Yeah.
How does the world look from up near a glacial lake and a lot of granite?
Yeah, or maybe more importantly, if the fourth turning gets really bad, you can go hide up in the mountains with Neil Howe and Adam Taggart.
There we go.
All right. Well, look. Neil, I think it's probably safe to say you're probably the most asked for guest for 2026 amongst my audience. I get people hitting me all the time, hey, get so-and-so and get so-and-so. Your name, I think, has probably come up the most. And I think the people that are aware of your concept, the fourth turning, have no questions that we're certainly in the thick of it right now and are very concerned / curious to know, where you think we're headed from here. I asked my audience for questions for you. Obviously, I got just buried under an avalanche of them. I'll try to get through as many of them as possible here, but I've got a few of my own. And why don't we start with one of those, which is, very quickly. I'll give a 30-second description, amend it any way you like. Neil and his research partner William Strauss had written a book, seminal book back in the mid-90s, basically uncovering their research that revealed that America, but an increasing number of other countries, largely in the West, go through the secula, this sort of period of cycles, not unlike the seasons, that repeat roughly on the order of a human lifetime, so about 80 years or so. And they break them up, just like we have four seasons, into four turnings. And the fourth turning is sort of like winter. And it's one where the order that has persisted for the seculum basically falls apart and gets replaced by a new order that will be dominant for the coming next 80 years. And Neil, predicted that, kind of 20-teens-ish, 2020s, that's when we're going to be going through the next fourth turning. There certainly has been an awful lot of change of the kind I just mentioned in the intro there. So to the extent that we're in a fourth turning, and of course, Neil, your most recent book is The Fourth Turning is Here. How is it playing out versus the expectations you had coming into it?
Adam, thank you for summing up, in just a couple of minutes, the main thesis of, our work. And obviously, as we've gotten into it and up close, I study fourth turnings a lot more, right? I become much more familiar and interested in how they actually turn out. It was something very different back in the mid-1990s, right?
When it was all academic back then, yeah.
Well, it was way in the future. And I'll tell you something very interesting about the difference in perspective. Back when he came out with the book in 1997, everyone said, "Oh my God, what a horribly, pessimistic book. Everything seems to be going fine. It was the end of history. It was, global superpower, all that stuff, right?" Mm-hmm. And then it came out with a new book in 2023, and the reaction was the opposite. It was basically saying, "You actually think there's going to be a positive ending to this? How can you be so optimistic?" It's very interesting, actually. It says something about how our perspective has changed, right?
Yeah.
Back then, it was this great kind of global, integrated, right, democratizing, freedom-loving world, which everyone took for granted. And now it's everything going to hell, the rich getting richer, the poor getting poorer, everyone getting unhappier. And what do you think is possibly going to change this, right? Mm-hmm. This is going to be a slow road down to perdition, if not, the complete decline and fall of the West or the world or something like that. I will say that in the most recent book, I did get more specific. I don't know which perspective viewers would be coming at, but in the most recent book, I got a little bit more specific about the scenarios that I think are most likely and to be most instrumental in sort of affecting people in the fourth turning. And I really focused on three of them. One is the theme of conflict, which I think always reappears during fourth turning. As you know, Adam, a big thesis of our book is that, and our work is that generationally, conflict is the incubator of community. It's mm-hmm. always been true historically, and it always recurs, and it will happen again this time, right? What this world lacks, what certainly the country lacks as well, is any sense of community. Conflict sort of re-engenders community, forces people to rediscover community. And as well as a lot of other things come out long-term of fourth turning, not only as we go into the following first turning, which I suspect will be sometime in the mid-2030s, but that's going to be not only community, but authority, a focus on the future, and cultural conventionality, as well as equality, right? These are all missing today, right? All of these things, right? We complain about inequality today. We complain about lack of community, lack of authority. So we can talk about how that plays out almost as though the fourth turning as a cold front moving in with a warm front, and all the storms that occur. I would say, to go back to those three dynamics, one is internal conflict, the extreme example being civil war. We've certainly had one and a half in American history. I say one is obviously the U.S. Civil War. I often say the American Revolution, although, don't pay attention to labels. It was basically mm-hmm. a civil war between patriots and loyalists within the colonies. Sure. A lot more people were killed in the American Revolution, by Americans killing Americans, right, than British or Hessians, right? And so we've had those before. And you go way back even further in the colonial experience. We've had plenty of civil wars in American history. And the other is geopolitical conflict, right? External. We've had those as well. And those are both very real and alive today. So we can go into both of those, right? I think they have both equally became more salient in Americans' minds recently, right? We see what's happening politically in the United States, how completely wackily polarized this country has become, how the two sides don't even talk to each other anymore. You know, they've become the other, right? The enemy within, this is Trump likes to put it. And my point is,
and they've gotten to the point where they feel sadly more comfortable justifying violence against the other, right? We've gotten to the point where, hey, we're seeing some political assassinations or assassination attempts.
This is part of the dehumanization. Okay, so you got that. And then you've got the growing fear of geopolitical conflict. I think that's on everyone's mind. And we can go in and talk about Russia and China. I think China is the big one. And I think to an extent, I know we speak today right in the shadow of the extraction of Maduro from Venezuela. But I think the hidden story is about how this actually has something to do with China, right? China is getting oil from Venezuela, and it's also, beginning to design Venezuela as a sort of a Chinese colony. I mean, it's exporting, Maduro has been importing huge amounts of national security and weaponry and so on, communications bases and all this into Venezuela. There's kind of a backstory here, but I think geopolitical conflict is increasing. And then the other is, and this I know is dear to your heart, and that's financial crash. And unusually at this stage in the fourth turning, we are at a point of extremely overvalued financial markets. So that's something we can talk about as well. But I see that as a big problem and a big compounder of the trouble we're going to be in, right? So we can do comparisons. We can look at how much financial markets fell in the late fall of 1860 after Lincoln was elected, or we can talk about how much they fell in the 3 or 4 months after Pearl Harbor, but those were much lower valuation markets. This is astronomically higher valuation market, right? So that has actually been interesting more and more as well. So that is kind of that is really where my focus is, on looking in detail at a granular level of why all these things are interconnected and how they play out.
Okay. Well, let's get into all of them. And I've got some specific questions about 2025 I want to ask you first, real quick, and we'll get back to this later. But I'm just curious, the financial crash element to the fourth turnings, is that kind of like a feature and not a bug? Meaning, if inequality is an issue, obviously one way to decrease the inequality is to bring down asset prices and make the rich less richer as a result.
Oh, totally. And actually, that occurred during the Great Depression, World War II. Obviously, it occurred, about 12 or 13 years before World War II, right? The crash of 29. But if you want to look at long-term at the Gini coefficient, which is sort of the way we measure inequality, right? It rose to a high in 1929. It fell obviously during the 1930s somewhat. It fell even faster during World War II because of the enormous production, which suddenly gave high wages to ordinary people, and the ongoing inflation, right? Inflation plus wage controls plus financial repression. This is a package which always comes about during a fourth turning climax. And it's a great way of redistributing wealth. And then in the late 40s and 50s, we really continued to have financial repression until the end of the Treasury Fed Accord with William McChesney Martin in 1954. And then the Fed sort of had its own independence again, started raising interest rates. But the point is that in the climax of a fourth turning, inflation, and financial regulation, what I call financial repression, are not problems. These are solutions. They're solutions to the problem of redistributing wealth and redistributing income at a time when either A, people demand it, or it's necessary for the country's survival, or both. You know what I mean?
Yep.
And that is what people don't understand about inflation. Inflation is a wonderful tool for wiping the slate clean of a lot of rich people have nominal claims and opening up opportunities for those who don't, and to be able to push resources toward purposes, for instance, like, I don't know, building defense, fielding a military, all kinds of things you need in a crisis, or simply employed people who are out of work, that would not be possible without inflation. Because the great thing is, you don't actually have to take any money away from people through law. You just inflate everything so that their claims no longer are worth anything, right? And it's a very convenient way of doing it across the board. This is why fourth turning climaxes again and again feature accelerating inflation. Every one of them. The American Revolution, you remember the Continental Dollar, it became an expression worth as much as a Continental Dollar.
Right.
I mean, the things were worthless by the end of the war. The same is true in the Civil War, right? You think of the Confederate dollars became worthless, and even the Union relied about 1/3 on raising taxes, 1/3 on issuing debt, and 1/3 on inflation. And of course, we had a big deflationary push. We went back to the gold standard after the Civil War, and that had a deflationary impact on the economy. And of course, all the populists were upset about it, out there in the Midwest. And then the same thing in World War II. But you can look at other nations as well, even more catastrophically. This is done time and again. So that is definitely one of the dynamics we're looking at.
Okay. I said I was going to come back and revisit it, but we're pregnant enough in it. Why don't we just see it through here now? I'm sure we got people's attention here. So, all right. So we have an economy right now where certainly on the fiscal side, we're running deficits out the wazoo. On the monetary side, we've actually had some restraint of late, which has been kind of rare for the Fed that we've had over the past couple of decades. But the Fed is now back to cutting rates, and even though it doesn't want to say it, it's basically back to QE. So I guess none of that surprises you as someone who sort of is expecting more inflation from here. Where do you see us? So valuations are crazy high. You're absolutely right. On most of the major valuation metrics, we are at, if not at all-time extremes, we're very close. So there's definitely that risk. Economically, we're seem to be chugging along okay. If we listen to the administration, they're saying, look, this is going to be a gangbuster year because of everything that we just laid pipe for in 2025 with tax cuts and one big beautiful bill and deregulation and stuff like that. So do you see us, like how close to the precipice of financial crash do you see us right now? Do you think it's going to happen on this administration's watch, or is it going to require more severe types of policies that have not been enacted yet?
Jeremy Grantham once had an interesting observation on that. He said, once a valuation goes up to a 2 sigma aberration, you never know if it's going to go to 2.5 and then to 3 and then to 3.5. You remember the Japanese bubble famously just kept on going and going and going. It's very difficult to time, right?
Right.
And that requires a very robust strategy where you need to be able to ride it to some extent while it's still going, but have in protective measures for when it hits, right? That's the issue. But knowing that it's coming near is critical. I follow obviously Robert Shiller's CAPE PE, and he has new versions of it, somewhat more sophisticated. John Hussman, I think, has been excellent, and he's been at this for 10 or 20 years. He's been at this for a long time.
For a long time, since the GFC.
What's amazing when you look at all these measures, from Q, which is marketplace to replacement value of capital, to market cap to GDP to price over sales, price over earnings, all of these measures. There's not much disagreement between the different measures because they all follow each other. They all say the same thing. It's not like they disagree with each other, right? They all move in unison. The disagreement is not among the valuation measures. They're all telling you the same thing. The only question is, when will it pop? We know historically it always reverts to mean. Not only that, it usually overshoots, right? Mm-hmm. It usually overshoots to it undervalue, right? And then it kind of comes back. It's like one of those oscillators, right?
Right.
So, and I think people are pretty sure, and you can see a lot of people endorsing this opinion, that if you're like 5 or 10 years out, it's very unlikely you're going to get a positive, real total return in equity markets, right? Mm-hmm. Well, that should tell you something. You know what I mean? I mean, if that is your object 10 years out, then maybe you don't completely have to think too much about the path that's going to take to get there, if you see what I mean. It relieves you a little bit of the obligation to time. But again, I mean, there's always going to be FOMO. And just to quote someone else here, I think this is I think this is a Warren Buffett, or the guy who worked with Warren Buffett all those years, Charlie Munger.
Charlie Munger, yeah.
He passed away a while ago. He had a great quote. He said that what motivates stock markets is not so much greed, it's envy. Mm-hmm. And that explains a lot. It explains why the fear of missing out in an up market is just as real as the fear of loss in a down market, right? Because what do we compare ourselves to? Do we compare ourselves in an absolute? No, we compare ourselves about, am I keeping up with that guy and that guy? Because a lot of what we value are ordinal goods, which gets priced higher as everyone has more income, right? There's only so many houses on the top of mountains that you can buy. And the richer your peers are, the more they're going to bid all those houses up. So in a way, people are just as fearful of not keeping up to some degree as they are of the spike, kind of the logarithmic, disaster going down, which is obviously horrible. But I do think that it's easier for me to say in the abstract, oh, look, 5 and 10 years from now. But that's not going to restrain many people from saying, no, I've got to be in the market right now. You know what I mean? But yeah, I think that's at least a short answer to your question.
Okay. Well, so it's funny when you were talking about the sentiments of when you published the first book and then you published the second book, it was reminding me a lot about sentiment during market tops and bottoms, right? At a market top, nobody wants to entertain the idea that it could be anything, the market could be doing anything but going higher, right? They're all caught up in the FOMO. They're all, fully in on the party. Same thing at a market bottom. Nobody wants to touch a stock, right? And so what's funny is usually the prudent investor wants to do the opposite of what the herd is doing, right? You lighten up when people are manic and you buy when everybody's depressed, right?
That's the other famous Warren Buffett quote, right? Be fearful when everyone else is greedy. Be greedy when everyone else is fearful.
Yeah. And hey, look, the world's most successful investor, more people should listen to him. Yeah. So when you were talking about kind of these big themes, you had financial crash in there, and obviously you're making the case that hey, the math is telling us probably at best we have a lost decade ahead of us in the markets, right, where they kind of go nowhere, and the best we could hope for with that math is kind of just a sideways market for 10 years. Probably highly likely not going to go that way. Probably have some years that are up, some years that are really down, right? With true crashes, that type of thing.
Yeah, just to say the history of these plateaus, and you can look at all of them, throughout America. The history of these plateaus is it achieves a high, it goes way down, and then it kind of struggles back up, and then you draw a plateau line, right? So it actually doesn't very often go above the plateau, but it kind of that the market bleeds down fast but grinds up slowly.
Yeah, yeah. And to your point, historically, when the market's gotten to an extreme like this, we basically have zero incidences where it then just went sideways to burn it off
No,
for
it
10
never does
years.
that. It never
Yeah.
does that. It always drops and comes back. Yeah,
Right.
exactly.
But I guess in terms of a fourth turning, so you expect, we'll say financial turmoil, but probably a financial crash somewhere in there. Is it just on the financial side, or do you expect a concurrent economic crisis like we had with the Great Depression? I know the history of the 1800s less well, but I'm sure we had some economic, issues in there during the fourth turnings. Um, so, are you expecting some sort of concurrent economic malaise to accompany said financial crash?
Yeah, I think there will be restructuring of the economy. I mean, for one thing, we're going to have to do a lot less consuming and a little bit more producing. That's going to restructure our economy.
Yep.
We are in debt to the rest of the world. If you look at the U.S. financial position, U.S. financial position, which the Commerce Department, recalculates every year, we're about 100% of GDP, owe more to the rest of the world than they owe to us, which is amazing because if you go back only about 15 years or so, we were about on par, right? This is a steep trend downward and it almost exactly parallels our large deficits, right? And the two are related, right? We have enormous deficit spending at the government level reduces the national savings rate in America, which pushes up interest rates here at home and requires us to import capital, right? In
Yep.
order to keep our own investment going, right? And it's a pretty simple dynamic, and that raises the question actually of whether the next crash will be just another, sand on the, a grain of sand on the sand pile, just reaching a critical point, or whether it will be something truly substantive, such as a global run on the dollar, a increase in interest rates, and there's a global reaction to what is going on in the U.S., or even something more serious. Obviously, we did talk about conflict, geopolitical conflict. You can imagine a war in the Western Pacific. You can imagine a very serious deadlock over Congress and the Supreme Court, and where government simply comes to a halt, right? Two sides simply refuse to cooperate with each other. You can paint scenarios like that. And either of those you can imagine also, kicking off. But the point of what's interesting is you have all these possible triggers of bad news, but it's the high valuation, which I find incredible. This is a rare combination, right? As I said, by the time we were very late in the Depression, 1940, 41, these were still Depression years. Interest rates were at record lows. We still had slight deflation. I mean, these unemployment was still barely up in the double digits. So those were low valuations, right? When trouble hit. This is going to be trouble hitting at very high valuation. This is exceptional, even for a fourth turning, I guess is what I mean to say.
So I'm not going to ask you to predict a size of a crash. Give me a number, but in the GFC, we basically saw the S&P go down by 2/3. It sounds to me like you wouldn't be shocked to see that type of financial correction here, given the stakes at play and the extremes of the valuations.
Yeah, I mean, 29 to 33 was about 75%. Looking at a total return basis and taking into account deflation and so on, I always look at total return. And if the reaction after Pearl Harbor had been from the higher valuation point, it also would have been about 75%. Instead, it was something more like 20, 25%. But the point is that it will hit a very low valuation. And I wouldn't be surprised at all. Now, if it starts coming down somewhat, well, then, you have less of extreme valuation.
You've got less froth to bleed out. Yeah.
Yeah, exactly. But I do think that the an extraordinary angle of having such high valuations is we're getting to the point where, we normally think of the the economy is driving the stock market. The economy moves and the stock market kind of responds to it. So we're at the point, Adam, where it's the stock market driving the economy. I mean, it's the fact that you have all of this wealth, the share of all consumption, basically retail spending by the top 10% is about half of all consumption today. This is greater than we've ever seen before. I mean, back in the late 1980s, it was about a third, right? This is unprecedented, and this is why we have an ongoing K-shaped economy. I live up here in West Virginia, and I guarantee you, nobody has any money up here, and there's a lot of poverty up here.
Yeah, you got a lot of the bottom of the K surrounding you, it sounds like there.
Yeah, and a lot of the bottom of the K. And it's also, I must say, capital spending is also K-shaped. I mean, other than tech, no one is spending much on capital. Yeah. I mean, that's the other interesting thing. This is structural within our economy. It's a unbalanced disease state, partly because of these valuations.
Okay, but to the earlier point we talked about, one of the fastest ways to address that, and I'm trying not to put a good or bad on it, is the fact that if we had a very large asset price correction event, that would bring the top of the K a lot closer down to the bottom of the K.
And it would allow younger people to buy into the market at much better valuations and much greater odds of actually being, substantial real appreciation, over their lifetime, right? You don't want to be the person who buys in at the highest price.
Right.
I guess that's and I think that leads to a lot of pessimism among the young. I think we also have a parallel problem in housing valuations. We have
Absolutely.
This crazy housing market with the locked-in mortgages and all the NIMBY rules to prevent people from buying, from building new homes, particularly in the Northeast and the West Coast. And this is leading to a sense of blockage for a lot of young people. How do I get ahead? When asset prices are so high and housing prices are so high, I feel like I'm being set up.
Yeah, and I don't want to rat hole on housing because we could talk about that forever. But another factor there that is tied to the asset price inflation is, we've got record ownership of single family homes by investors, both single mom and pops up to big institutions. And that's one other thing, as long as that top part of the K is doing great and snarfing up those houses, they're out competing the regular people that just want to have a roof over there.
And this has a political dimension, Adam, because we live in a kind of winner take all world. The total number of companies that matter are declining. And within each sector, we have one or two companies that are just dominating market share. And the problem is they set prices now and they get to dictate, what the consumer takes. We also have price discrimination, which I think is rampant in our economy. I mean, these companies take out every little piece under the consumer, welfare curve. And I tell people all the time that when you see, my FedEx and my Safeway and, all these special, consumer reward things, just another way to rip you off. I mean, they know your habits, so they're going to price it exactly to the extent that you can buy, and they're going to charge someone else some other number that they can buy. I mean, whatever happened to the single price for everybody? No. This is much more clever. And it's tantamount to another form of monopoly pricing. But let's not get off on price discrimination. But you touched off something
You're passionate. You're totally passionate, and I am too. I've said many times, it's almost hard now to find an industry that isn't really run like a cartel, right? With a few big players who then protected them with regulation and buying off, the regulators and politicians. So presumably, then, as part of the fourth turning on that dimension, you expect, I'm guessing, trust busting and stuff like that to start to become back into vogue.
Yeah, typically what happens is not so much trust busting, it's just that the restructuring the economy is so extreme because what the country needs to do that just no one cares about, who's an incumbent anymore. Whoever can do it. And the other thing is the public sets in to set price limits, not just on goods, but on profits, and even buy up the capital. By the way, I don't know if you saw, but Donald Trump is becoming a socialist. I mean, he's buying up Intel, he's buying up all these companies,
I
right?
know.
So, but this is a sign of where it's going. During World War II, despite the fact that you had all the auto manufacturers producing, tanks and warplanes,
Tanks and
like
planes, yeah.
Kaiser and all these people, you would think they would have made a fortune, but actually they didn't. They're first of all, the much of the capital they invested was directly purchased by government. By the end of World War II, manufacturing companies in America, over half of the capital stock was owned by the government, believe it or not. We don't realize
Wow.
to what extent that occurred. Now, that was sold off in the late 40s. But my point is that a lot of the returns on that capital, first of all, were price fixed by people like
Hmm.
Harry Truman. By the way, Harry Truman was a senator, and he was traveling all around the country looking at companies, mills, steel mills, and all that stuff, and making sure that all of their margins were, capped, right? But this was the expectation. Everyone was supposed to sacrifice because of what this country was going through. And you want to explain that declining Gini coefficient we talked about, right? This was part of the mix.
Okay. But it took something like World War II, as you said, sort of conflict being the incubator of community. It gave us something that we could rally around,
And
were
we had
maybe
no choice. We had no
forced to
choice.
rally
We
around.
didn't
Yeah.
voluntarily do this. I want to make this
Yeah.
clear. We didn't wake up one morning and said, let's equalize incomes. No,
Right.
that is
But
not
it
what
gave the
happened.
government the quote authority to say, look, you're going to eat this
Totally.
because of X. Yeah.
Yeah. And the public gave the government the authority because the public was scared. Everyone was scared. We didn't know. We thought fascism was going to take over the world. I mean, we were the only major democracy left.
Right. All right. Well, look, I'm going to stick on finance just for a few more minutes, then we'll get to some of the other bigger themes. So, just a quick little preview. A lot of folks watching this, Neil, as they hear you talk, are thinking, okay, you know what? I can be in favor for the events of the fourth turning that bring inequality down. Like I can emotionally get on board with that. Personally, I don't want to be collateral damage when that happens, right? I've worked really hard to build my wealth. I want to protect my family. How do I make it through the fourth turning without losing what I have? Now, I'll ask you that question directly as we get near the end, but I just want to let the audience know something that you've been actively involved in recently is trying to give people a solution there. And you've recently come up with an ETF, and we'll talk about the details of that in just a moment. But can you just maybe speak for 30 seconds as to kind of why you created this ETF?
I created this ETF, which I should just say, it's HEFT, a Hedgeye Fourth Turning Fund. So it's easy for anyone to find for a very simple reason. And that is that the single biggest question that I got from readers after reading the book is, okay, Neil, I agree with you. What can I do?
Mm-hmm.
How can I prepare? And I thought the ETF was the perfect vehicle because it is completely democratic. Anyone can invest in an ETF, right? With almost any money. You don't have to be a qualified investor or any of that fancy stuff. So I thought this was a great tool for anyone to be able to invest in, which focused on something that very few funds do, which is real return over time. That is to say, inflation adjusted real total return over time.
Mm-hmm.
And we have some strategies for that, which differ significantly from a lot of other funds, we can talk about later. But that is the purpose, to protect people's savings, whatever they've earned, for these kind of things we've been talking about, right? And also to do better than just putting your money into T-bills or something like that.
Right.
You obviously do want to participate to a substantial extent in stuff that's growing, and this is the answer to that.
Okay, great. Thank you. So I just wanted folks to know we're going to continue talking about kind of the problem set for a while, but we're not going to ignore potential solutions and constructive actions you can take. And one of the ones, like I said, we'll talk more about it, but is this new ETF that Neil has launched. Okay, so Neil, uh, Donald Trump definitely disruptive, right? Of the type of leader I imagine you expect to see during a fourth turning. You expect to see disruption. He is taking a very much America first, mindset. So forget so much the rest of the world and globalization. We're going to take care of our own. We're going to address some of these long-standing problems that we've had here. Whether it's immigration, whether it's he's talked a lot about Wall Street benefiting to the expense of Main Street, and we want to have Main Street come back. We've hollowed out our manufacturing. He says he's trying to bring manufacturing back. He's done the tariff wars and everything. So I'm presuming these are of the flavor of the type of disruptive policies you expect to see in a fourth turning, where somebody says, all right, you know what, I've been given a mandate to come in and do things differently, right? So I'm starting to do things differently. In terms of like where you think we're headed in the fourth turning, is Donald Trump putting us on the path to get there? Like, are these the types of policies that you would expect to see on the way to an end of the fourth turning where we've got more community and equality and authority and all that stuff? Or are you anticipating that this is, the pendulum's going to swing to a different direction before this is all over?
It may well swing to a different direction before this is over, right? We see quick swing.
The President Mandami direction, maybe, right?
For all you know, right? We have enough time left. And I do think it's interesting. You do see certain trends which, and I think it's important to look at them, which characterize both red and blue, that we don't like to talk about, or we often minimize, right? Mm-hmm. But in both sides, there's a growing populism. I mean, there's just no question about that, right? That, for instance, there's no problem for the government to go in and do something about big tech or, these companies. The public mood about AI is incredibly negative. I mean, mm-hmm. when you ask the public about what they think AI will do, this is nothing like the dot-com was back in the late 1990s, when people were kind of, cheerful about it. All these little new companies, they just see these big behemoths coming in and just, gobbling up, wanting more market power, right? Gobbling up a greater share of our economy and doing things that don't seem positive at all, really in their lives when it comes to their family, their kids, their schools, and perhaps even their jobs.
Well, I was going to say, yeah, you've got three big factors there, which is one, I don't really see how it's going to improve my life that much. Two, it's just going to make the corporations even richer. And three, they're going to get rid of us.
Yeah, they're going to get rid of us. And by the way, I have a special take on this. Look, I believe that all of these great tech revolutions ultimately do transform the economy and transform us over time, right? Mm-hmm. The dot-com revolution certainly did this. I have no doubt that AI will do this, even the large language models. But they will do that over time, and they will do that despite the fact that some of the biggest names in it today will wipe out entirely. That is the lesson of history, right? Mm-hmm. Amazon, do you know how much it declined between 2000 and 2003?
95%, something like that?
That's about 95%, right?
Yeah.
And the others went out there completely, right? But Amazon was up there almost completely wiped out. What was the greatest epitome? What technology epitomized the new economy in the 1920s, right? The one technology that was truly the modern thing of the 20s, right? It was
radio, car?
It was absolutely radio.
Yeah.
And RCA, Radio Corporation of America, right, from 1932 from 1929 to 1932, top to bottom, was down 98%. Now, most of the other radio companies actually went completely bust. Radio Corporation of America was finally bought out by General Electric in the late 1980s, and you would have had to wait that line to get your money back. Not adjusted for inflation, by the way. You wouldn't have gotten the inflation adjustment, but you would have at least gotten your dollar value. But here's the thing. We forget that even though the underlying technology may well change us, that says nothing about the financial roller coaster that occurs in the near term. It occurred I mean, it occurred with steamships, it occurred with railroads, it occurred with cars, I mean, and it occurred with computers, and as we've just seen with the dot-com. So I have no doubt that this will happen. I also have a unique perspective. One thing I think that is a weakness of large language models, which people aren't talking about sufficiently, and that's my unique perspective as an author, right? I write books for a living. And I get returns on my IP, so to speak, I guess as royalties.
Sure.
But one thing we haven't thought about is that, everything in my books is completely hoovered up by these people, right? So, they go behind paywalls, they go everywhere. They have their little web crawlers. They're everywhere, right?
Yep.
No one has thought about the fact that once everyone's IP has been amalgamated into the AI, no one's going to go to the creators of the IP anymore. You understand what these large language models do. They don't think of anything creative themselves. They just go out and find what everyone else has been writing, right? The most popular people, the people that seem to know, and they take all of their words and they kind of, reshuffle them for you when you ask a question. But what's going to happen to pay the people back that's doing all this stuff? When Google put on this happened about 9 months ago, right? Google put on its little AI summary at the top of the page when you go in and make a query. Click-through rates to the site went down by 50%.
Yep.
This is a disaster for the very dot-com economy, which we created a couple of decades ago, right? Because there's nothing left now for the creators of web content. Either two things are going to happen, Adam. Either they're going to have to find some way of AI of compensating these people, which is going to take a huge chunk of their revenue away, or the web's going to dry up and be just filled with nothing but AI generated content.
Right, because there will be no incentive for content creators to create anymore.
Exactly. I won't put anything on the web anymore. I'll go and if you want to invite me to come and talk with you personally, Adam, I'll do it.
Yeah.
but it's interesting that.
But you'll charge me, as you should.
but it will completely negate the power of the dot-com revolution, which I think really was a boon for all of us. And I do think this is a case of the parasite killing the host. It won't do it in the short term, but ultimately all you're going to have is AI content. And when you feed AI content into AI, it just produces mush, as you know. There's nothing new going into it, right?
Right.
This is a problem which I think is gradually it's one of those hidden costs that no one quite thought about, right? Which is beginning to sort of ooze up here.
So I think you're making a great point that I agree is not being talked about enough. But I will say personally, one man's opinion, the bloom coming off the AI rose is kind of, I have a high on my bingo card for the thing that could trigger the financial correction that you're worried about. Because so much market value now is in such a few number of companies that are now worth trillions, and how much of that market value is potentially phantom market value that's going to dissipate the moment that Wall Street says, you know what, this thing's not going to generate the returns we thought it was going to, at least not on the timeline that we currently have priced into these stocks. And when they go down, I just don't see how that doesn't pull so much of the rest of the market down with it. And then, as you said, the market's really driving the economy now these days. How that doesn't then trigger, some pretty unfortunate economic implications.
Well, and also we're going to see how it reflects back on sort of the false signals we're getting for GDP. I mean, 4.3% real growth, right, last quarter. Well, when you consider all the investment in the stuff that may not have any worth, and all of the market cap that these people are consuming on, which maybe disappear in the future. Do you see what I mean? We've pulled from the future a lot of spending power into the present when that future value may not be there.
Right. And that's true of every bubble that we've had on these technological overbuildings. Yeah. The difference, though, and I'm curious to get your thoughts on this. So let's look at the railroads. Let's look at the internet, where we overbuilt, we overinvested, and that's the way these things go, right? Because nobody knows how high the mania is, so they're just putting capital in until we find out where the limit is. And then, okay, we've got all these railroad tracks that no one's going to use immediately, or we've got all this dark fiber now that, there's no use for. Well, over the intervening years, once you have the correction, the survivors and the new players come in and start putting that fallow infrastructure into productive use, right? And the thing there is iron railroad ties, they were perfectly fine 10 years later from the day they were put down. Same thing with the dark fiber. There's a big question whether these data centers that are being built out and all this compute that's being built out is going to have a long shelf life. Like a lot of these NVIDIA chips, they kind of get obsolete every 12 months or so, right? 12, 18 months. So could this time be different in the fact that the overbuilding has even less value than previous overbuilding periods?
Well, they still will be pretty fast graphic computer units. I mean, they'll be out there. I'll tell you what though, the cost per GPU will go down to practically nothing.
Nothing.
So,
Yeah.
you'll be able to do a little bit like a Global Crossing. You remember how cheap it was afterwards.
Yep.
It's going to be the same thing. You're going to be able to do all kinds of fun things with machine learning and LSTM models. I mean, we'll all be able to run them for practically free. It's going to be kind of fun,
That's kind of so like almost everybody will have their own like personal Cray computers worth of compute available because they're just giving it away.
Exactly.
Yeah.
It's going to be fun.
Super fat. Well, again, and that's part of your. We'll hopefully get a chance to get to some of your optimism here before we're done here. But okay, so we've gone through the economy and the financial side of things. How about societally? Right now, as you said, we're sort of hyper divided, and kind of on every dimension. Politically, but also socioeconomically. A lot kind of demographically, there's not a lot of love for the boomers, from amongst Gen Z. So give me kind of your current like real time commentary on where we are there and where you see it headed from here.
Well, first of all, a lot of the craziness out there, you see this every time the market reaches highs. You ever notice that? It was true right after COVID. You remember that time when the market was really high? People were doing crazy things. You remember AMC and all those weird
Sure,
things,
yeah.
getting the people to cover their shorts and all. I mean,
Apes strong together, sure.
yeah, exactly. But there's always a lot of weird craziness at the top of the market. And I think everyone will become a lot. I mean, I hate to say this is maybe a commentary on humankind, but I think all of us will get a lot saner and a lot more down to earth and practical, if and when the market is down 30%. You know what I mean? It's just like, okay, the casino money's gone now. Let's actually look at the real things going on in my life.
Right. And maybe to that point, like pay more attention to the things that really matter, not just did my meme stock go up another 10% today.
Well, exactly. Exactly. Prosperity does not always make us happy. This was noticed by a lot of people in the late 1920s. I think F. Scott Fitzgerald did plenty of commentary on that.
Mm-hmm.
But I do think that I see some trends just in terms of people's habits, which are very interesting. We're beginning to talk about them. This populism, the idea that the community, the public, the government, however you want to talk about it, should start assuming control of some of these things. For instance, investing in big corporations. Here you have a Republican that's doing it, right? Everyone complains about Mamdani, taking over a few grocery stores. Well, what about some major industrial companies?
Or what about a country like Venezuela?
There you go, and run that. And what's interesting too is it, and I find this is an interesting point, is that when we talk about one fourth turning attribute is this movement toward authority, right? Trump doesn't really want Maria Corina Machado in there, right? This was the democratically. I think Trump prefers a flunky of a dictator. I mean, just a yes man, or a yes woman in this case, right? I don't think he wants. Now, what a clear contrast with Reagan conservatives. John Winthrop's City on a Hill, Freedom and Democracy for the World. America is going to be this example of popular participation. It's very interesting to me, and I've seen this over the past 5 or 10 years. Americans are less enthralled with the very idea of democracy, particularly young people. You look at the biggest decline. Young people look at democracy and they think it just means older people talking all the time and never changing anything, right? And populists, since the beginning of history, have always wanted someone with dictatorial powers to overcome the corruption and the indolence and the sclerosis of the system, right? Mm-hmm. You need for the corrupt Roman Senate, you need a Julius Caesar. You know what I mean? I mean, it's always that same pattern. You need the populares was always going to be a strong man.
Yeah, and I think it's sorry to interrupt, but I mean that was kind of Trump's platform, especially the second time around. Of not only am I going to clean up the swamp, but we're going to have Doge. Right, we're going to try to get rid of the rot. Now, we can debate on level of success and stuff like that, but that was kind of a big part of his populist appeal, correct?
Yes, I think it continues to be. And I think where the Democrats could make some real headway, you see in some of the congressional candidates they're running, is I think the Democrats are going to move very strongly to the right in the culture and to the left in economics. There's no question about that, right? So in other words, they're going to be like, okay, when it comes to family and all that stuff, we're okay with that. We're going to put up American flags and we're good with all that. But we're going to be really aggressive about stuff like healthcare, right? Mm-hmm. I mean, look, you want to know most Americans' feeling about healthcare. It's beyond despair. Our healthcare system is so completely messed up. I mean, it's not a market system. It's not a states. It's just a mess, right? And it costs are ridiculously high by any global metric. And no one really...
And outcomes have been going down. Yeah.
Excuse me?
And outcomes have been going down.
And outcomes are atrocious. They're the worst in the world. We're the only country which has had declining life expectancy since 2014. We might, I'm a demographer, so I follow these things. Yep. We might actually, this year, post-COVID recovery, be back to slightly higher than we were in 2014. That was like 12 years ago. Meanwhile, Europe and all these other countries are up another 2.5, 3 years. And we spend so much more than the rest of the world on it. You know what I mean? I don't want to go on and on about healthcare, but healthcare is a great example. You have this industry, which is massive. It's 17, 18% of GDP. It, in my opinion, has negative productivity. It is worse outcomes for this, despite the fact that it gets more and more input every year. And basically, it's run by all the medical specialties who control the treatment guidelines for their own profession, and they just punch their credit card. It doesn't matter what the outcomes are. No one has critical oversight. But patients can't really input it. I mean, do you want to tell someone whether a surgeon, whether you really do need a quadruple bypass? Right. I don't think, but my point is that this is the kind of stuff where people think you just need authority. You need someone to go in there and say, you know what? Tomorrow we're just going to change all the rules. Big, right? We're going to do it. We're just going to start over from scratch here. And there's a bigger mood for that. And I think to some extent, this is the fourth turning mood. We did the same thing, by the way, during the Civil War, the enormous institutions we created then, Transcontinental Railroad, the land grant college system across the country, the national banking, all that stuff. And we did the same thing, during World War II. We created these big national institutions, Social Security, and, all of that was one of them. But my point is that we do our biggest institution founding and building at a time of crisis. We never do it at a sunny day. We always do it at the worst possible thing. Can you imagine we founded Social Security? The plans were set out in 1934 and the legislation was signed in 1935. Do you want to know what the American economy looked like back then? And yet we chose that moment, right? And you look again and again, this is actually one big message in my most recent book, The Fourth Turning Is Here, is that every time we actually found huge, durable new institutions, which last much longer than a lifetime, we do it at the darkest darkest moment of our history.
Moments. Yeah.
Now that's a good message, right? As well as a bad message. It
Yeah.
means that we go through a dark period, but it's a period that's enormously creative. It's creative for a future, and it switches us toward thinking about our future.
Yeah. So it's interesting because it's kind of the worst and the best of human nature, right? I mean, the most people don't change their health habits until they've had the first health scare, right? The first heart attack or whatever. Okay, that now I'm going to start really getting serious about eating better and going to the gym, right? And it seems like as a populace, sort of the same thing, right? But to your point, we have a history, at least so far in this country, of tremendous creative production in terms of creating new institutions that are better and stuff when the chips get on the table, but we don't really do the work until our backs are pressed against the wall.
Yeah, and I would say, one sign of that is the fact that um, democracies perform very well under crisis. I think it's a stereotype. I think it's an incorrect one, but it's sort of a truism out there that when you go to war, you want to be a dictatorship. But if you look historically, the opposite is true. Dictators actually run pretty well during peacetime. Democracies are terrible during peacetime. But when it comes to war, when you've got everybody on the public on the same page,
Mm-hmm.
democracies can vastly outperform autocracies. And the reason is because when a democracy goes to war, everyone only has one object, defeating the enemy. When a dictatorship goes to war, the dictator has to worry about two things, the enemy and his own people. And it's very interesting when Germany invaded France in May of 1940, the UK, England, put its production of Spitfires into 24/7 production. In other words, they had production runs around the clock, all night going along, right? Everything in Britain was completely mobilized because, of course, they had complete popular support for this. Hitler did not put the German economy on wartime footing until late 1943, basically when the war was practically over. Why? Because he didn't want to impose burdens on them. He thought the German people would actually, resist or try to move them out of office. We forget this, though. Democracies, because of the scent of all people, when they know that they're up against the wall, are an absolute force to be reckoned with, because you can have popular cooperation and enthusiasm with authority at the same time, right? And that's a dynamite combination.
Okay. Well, good. That's just injecting some of the optimism into here. Just because you love these great historical quotes. There's the one from Winston Churchill about Americans, which maybe you can just apply to democracies, right? Which is you can always count on them to do the right thing after they've exhausted every other potential option.
Every other option, yes, exactly.
Yeah.
But at least Americans do move on, right, to a new solution.
Okay, so what's interesting is kind of what I hear you saying is um, we're going to see more Trump-like leaders, both in America and I'm guessing probably other places in the world too. And I don't mean they have the same policies necessarily, but a guy that just gets in there and says, I don't care about the old rules. I'm just going to do what I think is right. I'm going to break things that need to be broken. I don't care so much about the blowback on my popularity from that because we just need to get this done.
Yeah, and the breaking of a lot of institutions have been with us for decades and decades, which no longer work. That's why I talk about sclerosis, right? These are
Yeah.
and much of, you look at much of Congress. Congress has been sidelined by Trump. I think that's definitely cause for concern. We are, after all, a republic based on a constitution. And as I remind people, 2/3 of the US Constitution is all about Congress. Only a little bit of it is about president. Just by the way, that's what our Constitution says we're supposed to be, kind of a republic, right? Run by a legislature. But nonetheless, I totally understand people's impatience with its inability to get things done. And so
Yeah, it's kind of become a gridlock factory in the past several decades.
And FDR was seen by that in the 1930s. A lot of people called FDR a dictator. And by the way, they didn't always call him that disapprovingly. You know what I mean? But we're going to draw on that, both the populism and the authoritarianism, basically someone acting as an authority and getting things done, and in the process, this whole transformation from inequality to equality, and from sort of individual pursuing their own ends to community is going to be part of that. Now, obviously, that doesn't really ramp up until we're in a conflict. But I think I can say this: increasingly, we see the conflict right on the horizon. I think we see it in foreign affairs, and I think we see it here domestically at home.
So on that point, what do you think is more likely right now? The conflict that unites us in the end, or whatever it was, that incubates community. Is it more likely to be an internal one or an external one?
I wrote this in my last book. I said the knife edge between it tipping one way or that way is often one of the last things that's decided in the fourth turning, right before the climax. Interestingly enough, there was William Seward, who was Abraham Lincoln's Secretary of State. He thought he should have been the nominee for the Republican Party, so he was a little bit sour about that. But Lincoln was magnanimous. He grabbed all these people who were his competitors and brought them
his cabinet of rivals or whatever. Yeah,
exactly. And Seward wrote a memo because, of course, the first thing they encountered immediately getting into office is all the Confederate states had seceded, and there was this crisis building up over Fort Sumter, right, in South Carolina. So Seward wrote this long memo saying, okay, here's what you need to do to deal with this problem. Immediately declare war on Spain, France, and Britain, because that would unite America, right? We would, and it was kind of crazy. It actually makes you think that we're lucky as a country that Lincoln was elected, right?
Right, and not Seward, yeah.
But you do see his rationale, right? Is that by even at the last moment, we could galvanize for a external conflict and somehow forget our internal conflict. Remember that when we went to war after Pearl Harbor, America was a hugely divided partisan nation. I mean, a lot of people thought of FDR as Franklin's Delano Roosevelt. I mean, he was he's part of the Popular Front. He might as well be allied with the Soviets. And on the other side, people saw the Republicans as fascists, and of course some of them were sympathetic to the, you know what I mean? But we forget that was a time of tremendous ideological division, and that if you had asked most people back in 1939, say, about if we had a crisis coming up, what would it be? They probably would have said internal. I mean, people still had memories of Huey Long, Share the Wealth, Demagogue. So here's my final point. It's so much easier to see history backward than it is to live it going forward, right? Because we know how it came out.
So totally agree. And I'm going to ask you some external questions in a second, but internally, what are your top candidates then? So if there is a societal rift that becomes potentially violent, what's going to be driving it? Is it going to be between the classes? Is it going to be between the races? Is it going to be between the age demographics? Is it going to be geographically? Where do you see the tensions greatest?
I think it's going to be, if it were
politically, I should have said too.
For globally, I think it's obvious. I think it's China, Russia are the two together. I mean, I think that's behind everything, frankly, and arguably even behind some of the issues we're having in South America. I think that's clearly on the table right now, and I also think that China does have a timeline, right? I think Xi Jinping wants this thing resolved in the Western Pacific, before he passes from power. I think the clock is ticking on that. And I also don't think we can afford to let that go. There's too much of the world's GDP in the neighborhood. You know what I
Yeah.
mean? Plus all the microchips. But it's just too important an area for us. I think our any reputation America would have would never recover. From simply giving that up. So I just don't think that's on the table. So I do see that. At home, I see it as one party championing one side of their blue zone or their red zone, feeling that there is a danger and this is classic for civil wars. Civil wars take place when one side fears that some outcome that is just about to happen or has just happened may permanently uh, uh, may permanently take away the future that they were expecting for their class, for their culture, for their people, for what I mean,
Yep.
for those in their tribe. The reason why we had the Civil War, it didn't have to do with slavery in the South. I mean, Lincoln promised to leave slavery in the South alone. It was the South's fear that the free soil policy of the Republicans would forever prevent the South from spreading slavery throughout the rest of the country. And that meant that in the long term, their way of life was doomed, right? It was the fear of the future. And that's what always triggers a civil war. It's like, if we don't do something now, we will be now forever diminished from this type long, right?
Yep.
And you have to remember that up until the Civil War, the South had dominated Congress. They had dominated the presidency. Most of the presidents were Southern, to the constant complaint and whining of Northerners. The Democrats were actually very successful politically, and they thought with their cotton economy was actually pretty successful economically, but they suddenly faced this moment where their future now seemed permanently in doubt unless they resisted now. I think the same kind of moment is going to occur, for instance, if the Democrats fear that whatever Trump will do with regard to, bringing the National Guard into cities or somehow regulating the vote, would mean that the Democrats would be permanently disadvantaged. And to be fair to these Democrats, Trump does sometimes talk like that. He will actually talk to the Republican senators. If you give me the filibuster, the Democrats will never be elected again. We can imagine how Democrats are reading that. It's like, this is so.
Probably pretty similar, just to give a counterweight there, to how the Republicans felt about the open border policy, where they felt like, hey, they're bringing in permanent Democratic voters and we'll never get reelected again.
Very similar to that, or how Republicans felt when Trump was being serially indicted. You know what I mean, by all these court cases. No, I don't mean to say one side or the other. I'm just saying
you're not being partisan. You're just saying what could be a flashpoint.
It's the mood here. It's the mood. It's like there is a mood of take no prisoners, right? We need to make sure we win once and forever.
Yeah.
And that is what would imagine if at some point the Democrats simply or imagine a Supreme Court decision that Trump ignores. I mean, it would be another way. Imagine the Democrats say, you know what? No one listens to us. Trump isn't following anything we say. Supreme Court isn't, we are doing nothing here. We're no longer going to sit in Congress because we're just giving legitimacy to Trump. Mm-hmm. We're going to meet in some other city. I've sometimes suggested Lake Placid or somewhere up in a blue zone militia or something, I don't know, way up there. But is that unthinkable? I don't think it's unthinkable anymore. I think if you had said 5 years ago, I said that's unthinkable. I ask you, Adam, is that unthinkable?
I don't think it is, although hearing you talk, I'll tell you the one that's bubbling up most to my mind that could be on this dimension is the capitalism versus socialism, which is that we have enough, especially younger generations, who are now coming into their voting majority, who just are losing hope that, if we just keep the system going the way it's been going, the big corporations are going to own everything, the top 1% is going to own everything, we're just going to be serfs, and therefore we need to switch to some new model, or else we're going to be just permanent serfs the rest of our lives.
I agree with you. We're talking about two different things. You're talking more about the issue. I'm talking about the mechanism by which that would happen, right?
Sure, sure. Yeah, totally true.
You
But
may
yeah,
be right. In other words, the issue that could push it, but there's always a mechanism like the election of someone, or you know what I mean? There's always like some event. But I will say that if the two parties begin to stand for two different things, I mean, what's the biggest complaint about Trump and Venezuela? It's clearly all about enriching the oil companies. I
yeah,
mean, this is not exactly a MAGA or Bannon friendly um, line, for Trump, right? And so you do see an opening, a potential opening for Democrats, right? If they decided to seize it. My point is, you don't know exactly how it's going to shuffle out, but I'm
right.
saying one side will be on one side, the other side will be on the other, and the other side we will be permanently marginalized with no hope of recovery unless we act now. And that's how you take the rising propensity for violence and the rising toleration of violence. If you ask people, is it, ever correct? An increasing number of people will say it is. Particularly if you ask them, if the other side starts first.
Right, right.
But
And
but
so,
but but that's kind of where we are.
right. And so again, just to make sure I'm good on your understanding of fourth turnings is um, while that breaking point um, may be very disruptive, it may be very unfortunate, it tends to be the thing that kind of hastens the end of the fourth turning because it pulls people together. They've got to pick a side and they've got to start working together towards some greater good, right?
Yeah.
Let's heal the country, or hey, we all just became 50% poor and we got to pull each other together now, or whatever it is, or hey, that country's trying to invade us. But whatever it is, we got to pull together.
The problem is that this time around we have two things. One is this very highly overvalued stock market, and
Hmm.
the other is some huge geopolitical rivals that would love to just gobble up a lot of stuff while we're distracted. You see what I mean?
Yeah.
And so that's what did not occur the last time we had this breakout in the 1860s. So in other words, we have a lot today where all these things rest on each other in a way, right?
Hmm.
Obviously, the market economy is vastly more important than it is today than it was back then,
Right.
and back then we didn't have geopolitical issues that really mattered much. Um, so this is going to be fraught with danger because you see how all these things are interrelated, Adam. Do you see what I mean? I mean, you see it
Absolutely.
markets first on the geopolitics on how divided we are. And every time we go through these convulsions, or perhaps, we get sidetracked in a way we don't want to in South America, perhaps you can understand why America's rivals, Xi Jinping and Vladimir Putin, are absolutely delighted, right? I mean, this is wonderful news for them.
Well, let me ask you this. I just because I'd love to get your thoughts on, you know, the current administration seems to have, really uh, rediscovered an appreciation for the Monroe Doctrine, right? You probably heard Trump
Yeah,
refer to it the other day as the Donroe
yeah,
Doctrine, right?
yeah,
And part of Trump's his campaign was, look, I want to get out of American intervention and all these other foreign wars and stuff like that, and let's really focus on home and let's build Fortress America, and let's try to clean up our hemisphere in a way that makes it much more America friendly. It becomes a massively powerful trading bloc. We get Greenland, hopefully peaceably, but we're able to really secure ourselves more, and we're less in everybody's business around the world and kind of wasting a lot of treasure and blood where maybe we shouldn't have been anyways. Um, d d Does that increase or decrease the likelihood of geopolitical conflict for America?
well, I think you have to look at it in the total global context. Um, one idea that's often raised is this idea of spheres of influence,
Hmm.
right? Yeah, let China have the Pacific or the Western Pacific, right?
Yep.
Let Russia have Eastern Europe, and we can have the Western Hemisphere. Well, and I mean, if Russia has Eastern Europe, they could pretty much dictate the terms for the West, right? But my point is that that's a pretty lousy trade for America.
America. Okay.
I hate to say it, but just add up GDP, go on a global GDP map, see what you're losing in the Western Pacific, take a look at Europe and see this little thin sliver over here, right, which is Latin America. You understand where I'm going with this, right?
I do. I do. Now, I can't talk for the administration. I'm sure they would say, well, we're not giving up everything else that we currently have.
Okay, but that gets to the next point. So we're already complaining. See, the Trump administration is saying we have so limited resources. We can't defend the Pacific and the Middle East, and even Ukraine is too much of a burden.
Yep.
But apparently, going in, I mean, Trump says he's prepared to put boots on the ground, right? So, I mean, think about it. I'm not sure where Trump is when it comes to resources or what. Where is his focus? You know what I mean? That would be my question. Is it China, or is he more focused on Chavismo?
Right, and I don't know. And again, I can't speak for the administration. I believe part of the Venezuela thing, and I'm right there with you, which is like, hey, we broke it, now we bought it, we better make sure we handle it well, and it could be a big morass for us. Who knows? But a big part of that was, and I think you said this earlier, trying to push China from making Belt and Road partners in our hemisphere.
I think that's a good thing. I think the way you do it, though, and certainly the way America has always done it in its history, which is well exemplified, I think, during the Reagan administration, is you get all the world on your side by talking about basic universalizable principles, right?
Yeah.
We support freedom. We support democracy. We support rules that everyone will follow. And the problem is when you start saying, well, we get to just bully up our backyard, well, then obviously, China is going to say, well, that means, we can Finlandize South Korea and Japan, as well as take Taiwan. But here's my point. Trump cannot do that, right? He would never be allowed to do that, even Republican senators, as weaselly as they are, would get up and get in Trump's face on that one, right? So my point is that he cannot do that. He cannot let Eastern Europe go. And I think that's one of the reasons why he hasn't been able to, bring about this peace treaty in Ukraine.
The war that he was going to end in a day.
There are constraints that Trump, even though he might not wish to be bound by these things, he is bound by them. But look, how all this is going to play together, right? It's kind of a three-dimensional chess, as you can imagine, because you've got all this stuff influencing each other.
All right. So, Neil, I'm going to do my best to try to start landing the plane here. Thank you for giving us so much of your time already. And I do want to get to what to do about this stuff, especially on the financial side, talk a bit more about your ETF. If you don't mind, let's just do a little lightning round here. So here are some of the questions that viewers had asked here when they knew you were coming on. What U.S. and global institutions currently considered sacrosanct by most Americans do you think are most likely to see radical reform or elimination?
Almost all the global institutions, right?
Okay.
I think
like NATO type of deal?
Well, even NATO will be fundamentally recast, but the UN and everything else. I mean, Volodymyr Zelensky was absolutely right. He was interviewed about a month after the Russian invasion. He basically said, look, none of these, and he spoke to U.S. Congress, said none of these global institutions work anymore. You know it. I know it, right? We need to actually do something different this time. And so those are all going to be redone. And the question, which is much harder to say, is how national lines may be redrawn. As you know, that often depends on the outcome of conflict.
Yep.
And I do think we're going to see major changes internally within the U.S. government. I think we're going to have some way. What the Supreme Court is trying to do, at least the majority on the Supreme Court, is through the major questions doctrine, the Chevron doctrine, is they're trying to require. They're actually pushing in an interesting direction. They're trying to require that Congress do more things on their own rather than just leave discretion in the hands of the president, right?
Mm-hmm.
Which is a little bit at cross purposes. But on the other hand, the president, when it is his authority, has unitary power over everything. He can fire commissioners. They're trying to, the Supreme Court right now is trying to create a much more clear boundary line between Congress and the administration and the executive.
Good. I think, I mean, personally, I think we probably need that. So that actually sounds helpful.
I think they need that. I think the unitary executive is an okay theory, and I do think that the idea that Congress needs to actually, they can't just say we're going to appoint a commission with everything regulating everything about the environment, and the executive can do what it wants to enforce it. I mean, I think at that point Congress is just abrogating its constitutional responsibility.
Right.
But that is going to be a huge issue. I do think our republic is going to be fundamentally reshaped. Remember, out of all of these fourth turnings in our history, it's either given us a new constitution or a new reading of the Constitution or amendments to the Constitution. Remember how the Commerce Clause completely changed what the federal government could do after the New Deal, right? The federal government could go in and, for the next, I don't know, all the way up until today, can regulate pretty much anything it wants. I think it's going to see another big change. I think every fourth turning at its climax sees this big change going on in government structure.
Okay, really fascinating. Just quickly curious, there seems to be more interest right now in reforming the Federal Reserve than I've seen in a long time. Do you see the role of the Fed actually changing materially here?
I don't know. I think the Fed is going to bend a bit. I think it already is to the popular will. But look, I think this is bipartisan. I'm not sure it's wise from the viewpoint of, if you're really interested in keeping inflation down, you probably want an independent Fed. But on the other hand, as we've been just saying, maybe inflation is going to be in our future regardless.
Yeah.
And maybe in the future, people would see inflation more as a tool than a problem. I realize this sounds heretical now, but I do think when it comes to the Fed, both a Democratic president as well as a Republican president is going to be pushing the same direction, namely lower interest rates and extremely fast reaction time if the market starts going down or if unemployment starts going up.
Yeah. Okay. I agree with that too. All right. This one kind of a negative point, but I think maybe be part of the optimistic side of the story. There's an article that came out today. U.S. mental health ratings continue to worsen. I mean, they're just like the worst they've ever been in terms of people's reported happiness and general mental health. Do you think the transition into the first turning will reverse this?
Yes.
As we have sort of a renewed sense of purpose and roles, and
everything suggests that mental health is a strong correlation degree of community integration, community rootedness. And it's hugely lacking today, particularly among young people. And also just lack of participation in local government. It's interesting out here where I am, I'm in the rural red zone, right? And out here, it's very easy to get involved with government. It's easy in a rural area. You just decide with the neighbors to do something, and then suddenly the city says, okay, you know what I mean?
Oh, yeah.
I don't think it's that sense when you look at these big metropolitan cities and counties. And I do think that sense of detachment, both from family life and from local community, is absolutely a source of mental health problems. And by the way, that's a very particular part of an industry I'm long on, which is mental health treatment.
Mental health
hospitals. Yeah.
Okay. The next question kind of dovetails into this, which is what practical actions can individuals take that will best prepare them to weather the crisis, other than developing a strong sense of community? So obviously that's the community part's a big one, but we're going to talk about the money stuff in just a second, but presumably there's a lot of other, investments you can make in your own resilience. A lot of them aren't financial, that probably will help see you through this.
Totally.
Right?
Yeah. I'm actually writing a book about that. I have a new book out, a contract with Simon & Schuster. So we'll be releasing it. It's about how to prepare, right? And some of it will be on the financial, but a lot of it will be on what the threats are, how to assess the threats, particularly on issues such as how to prepare personally, which is what you were just talking about,
Yep.
where to go geographically, right? Which I think is a really interesting question. And how to deal with community and family. I mean, family is a big question for most people, so how to deal with that, and what optionality do you have? In other words, a lot of people believe, I think by and large, although in not all circumstances, but I think by and large correctly, that if a crisis gets really bad, a rural area is a better place to live than an urban area.
Mm-hmm.
But the question is, how do you make that? How do you leave that optionality open, and how do you work that into your own life? And so I'm going to be. These are the issues that we're going through in this book.
Fantastic. So this is near and dear to my heart for reasons I'll share in just a second. But when is that book expected to be released?
At the end of the year.
End of the year? Okay. So Neil, when that is ready for pre-order, I have a strong sense I've got a lot of viewers that would love to pre-order that. So we'll have you on here as soon as that becomes back on when that becomes available. Yeah.
Absolutely.
Okay. So yeah, so two reasons why, what you said is near and dear to my heart. One is my wife's a marriage family therapist. So I just see, on a daily basis from the sidelines, so many of these issues that are plaguing people today, and really this resolving them all has their roots in better community, better communication, stronger relationships, a greater sense of involvement with the people around you, or the people, either family or community, neighborhoods. In so many ways too, it's just a return to kind of how life used to be, like probably something that your grandfather or great grandfather just would have thought was the way the world worked, but we've lost a lot of that in recent generations.
There's a very large study done about 6 years ago, and they actually looked at the correlation between the population density of where you live, down to zip code level, and the probability that your next door neighbors. And it's an exact negative correlation.
It's an inverse correlation. Yeah,
in other words,
surprise me at all.
At the most dense urban areas, the people know least who's living just yards from them.
Right, just on the other side of the apartment wall. Yeah.
But if you're living in a place like I am out here, where your next door neighbor is a half a mile down the road, you absolutely know who that person is.
Right. Because you may need to rely on them. Yeah.
It's ironic, but I think it says something about what we lose in these big urban areas where you have infrastructure serving us all the time. Of course, that creates great vulnerability at times of crisis too. And that will be something I'll be talking about in my book. I mean, if you don't know, you imagine if you live in a city and all your services are being delivered to you, you have no idea how the water gets into your faucet. You have no idea what's under the hood of your car. You don't have a clue. I mean, you don't even know there's between a carburetor and and a brake pad. But this is what we're talking about in terms of personal resilience. I think in a time of crisis, although we are constructing a new system, in the interim, the existing system breaks down, and you need to be more resilient on your own, right?
On your own, yeah. So the other reason why this is near and dear to my heart is you may or may not remember this, but back in 2012, I co-authored a book pretty much on this exact topic, called Prosper, and the whole theory was we weren't at that time. I don't even know if I knew about the fourth turning model. But we were focused on a lot of the same risks that you and I talk a lot about, Neil. And it was all about, okay, here's steps you can take to reduce your vulnerability if these risks if they really manifest. But even if they don't, you're just going to improve your quality of life.
You're better off anyway. That's what I always say. It's a little bit like Pascal's wager, believe in God, and if he doesn't exist, you still will have lived a better life.
Exactly. Well, look, I'm very excited to see a modern revisiting of this, and you're a much smarter man than I, so I'm sure your book's going to be even way better than what mine was. But very much look forward to that. So we'll earmark that again when it comes ready for pre-order. We'll have you on here. Okay, so. This gets to the finance stuff, and we'll talk about your ETF. Let me ask the question the way the person answered it, and then you can answer it in any way you like. And it was, what does Neil have in his stock portfolio? I think the spirit of the question is what do you think is wise for people to consider prudently in ways to build protect their wealth, or maybe even prosper from some of this? If you want to share some of your personal holdings, great, but I don't want you to feel pressure to do so.
Well, the great thing about an ETF, Adam, is that all of our holdings are public.
Public, yeah. It's an
So
instant
at
way to
the
see it
end of
all.
every day, they're on the website. Just go to or a hedge IE, just if you type in Heft and you just go to the holdings, I mean, you can get there from almost any brokerage site or almost any market site, Yahoo Finance, whatever. You can go see. And I would say that I'm talking about just in general what the philosophy of this fund is that it's really two things to think of it from a portfolio perspective. One is that we match. It's first of all a win 50-50 fund, so we can go short up to 150, up to 50% of AUM.
Okay.
And the other is it's designed again for real return, real absolute return. So
Total return. So you're
we're
factoring
not
your
an
income.
index tracking fund, and this is a fund designed for people who just hate indexes and keeping up with index. We don't really care about the indexes. We care about having you preserve all your capital and do considerably better than any kind of interest, guaranteed or whatever inflation protected interest earning fund you can get, right? So that's what we aim to do. Now, the one strategy is that instead of pair net long and equities that we certainly have with bonds, which we think are a complete loser.
Mm-hmm.
You've been hearing me on inflation,
Or
right?
longer term bonds. I presume you probably
longer term bonds, which are nominal, not tips. I'm not talking about tips, but just longer term nominal bonds. Instead, we pair our net long equity position with commodities and commodity futures. Mm-hmm. This has been shown in back testing going back to late 19th century that this does particularly well in times of rising or high inflation, and in fact, commodity futures do pretty well most of the time. So that's our basic shift, right? Get rid of bonds, put in commodities, commodity futures, because you kind of take advantage of the backwardation. You're taking advantage of the fact that people want to lock in these prices of commodity. The second thing we do is it's basically a long short trade on forward turning trends. So, what are we long in, particularly? Well, defense, obviously, mm-hmm. right? So defense, not just the United States, but to some extent around the world, and some of the most innovative companies. We're long on power and energy right now, partly because of all of the hyperscaling going on, but also because we're breaking out of the limit we used to have in America for generating electrical power. We suddenly need all this new marginal power, particularly with regard to natural gas production and so on.
Right. So and not just for our own economy, but for national security reasons, because we're trying to outproduce other countries.
Exactly. And always, with resource extraction, you begin to say, why are we in Venezuela? And why is China now stockpiling everything, from oil to food to soybeans and all? Because everyone is beginning to be concerned of these kind of resource sphere of influence. Right. We think that's a winner. Obviously, precious metals is kind of in there with the commodities. And we have a number of other things. There are a number of particularly good defensive stocks were in there. I think the bottom side of the K-shaped economy has some good opportunities ahead of it that are already doing actually pretty well as we get, at this point of the late business cycle, you might say. So that just gives you a basic overview, and also taking advantage of the nearshoring and onshoring and import substitution that we're going to see in the American economy, right? And I think the long-term bias is more toward resource and capital production rather than consumer spending, particularly the stupid side of consumer spending. We talked about we're sort of more short the sillier side of the consumer spending, and that's kind of it. But again, this is part of the democratization of investing with ETFs. Anyone can look at it. It's right there. You can just, scroll through them.
All right. Well, look, Neil, fantastic. Like I said, this is something I think a lot of this audience has really been eager for a resource like this to be able to say, hey, how can I not just listen to what Neil is saying, but actually put what he's saying into practice in my portfolio? Now you're making it really easy because you're like, well, you don't have to build your own fourth turning portfolio. You've done it for them. And when I edit this, I will put at several times throughout the conversation here, we've mentioned it, Neil, I'll put up the ticker symbol for your ETF, which again is HEFT, HEFT, folks.
Absolutely.
And
you can go and click on it. You'll see it. It has a nice logo too.
All right. And presumably, I mean, literally any place stocks are traded, you can go get this ETF.
It's like SPY. You know what I mean? SPY. I mean,
Yeah.
it's like that. Yeah.
All right. Fantastic. Well, Neil, it's paining me to wrap up here, but you've given us so much time. I also have another interview coming up in 5 minutes.
Oh my gosh.
No, it's all good. It's all good. It's been fantastic. For folks who, beyond looking into Heft, would like to just follow you and your work in general on a going forward basis, while they're waiting for your new book to come out, where should they go?
We do have a Substack called Demography Unplugged. And mainly what we do is we do have short written pieces, but mainly we have a weekly podcast where we kind of discuss headline news around the world. And that should be interesting to people who kind of want to know what the weekly news in the world looks like from a fourth turning perspective.
Well, I'm a huge fan of your Substack. And again, Neil, I'll put the URL to it up on the screen here when I edit it. Folks, the link will be in the description below this video as well. Highly recommend you go sign up for that and listen to Neil's weekly podcast as well. All right, Neil. Well, look, we're going to wrap it up here. I'm going to give you a chance to have the last word. Just give me 30 seconds here. Folks, please thank Neil for coming on and giving us so much of his time and expertise and perspective. Let him know that by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. You've got a great resource to go look into there with Neil's new ETF. If you'd like some additional help from a financial advisor in both just sort of preparing and positioning your portfolio for these fourth turning developments that Neil thinks might be ahead, or even just asking the question, hey, how much of my portfolio should be made up of HFET or HEFT? Then if you don't already have a good professional financial advisor advising you, especially one that takes into account all the things that Neil talks about, then I highly recommend you scheduling a free consultation with one of the advisors that Thoughtful Money endorses. These are the firms you see with me on this channel week in and week out. And again, just ask the questions that I just mentioned there. To talk to them, just fill out the very short form at thoughtfulmoney.com. Only takes you a couple seconds. There's no commitment to work with these guys. It's just a free service they offer to be as helpful to as many people as possible. All right, Neil. Well, look, again, I can't thank you enough. For the person who is watching this channel, which is in most cases just a curious-minded, intelligent person who's been working hard to build a quality life for them and their family, obviously try to build as much financial prosperity for them, really don't want to lose it. They don't want to become collateral damage to the further changes of the fourth turning that lie ahead of us here. In addition to everything else we've talked about, do you have any parting bits of advice for them?
Yeah, look, this is going to be a difficult time ahead of us. I think it's a good time to assess, where your loyalties are, what your future is. And, you hear all the time, right? A lot of these Silicon Valley moguls preparing bunkers in New Zealand, and you just think, really? Right? That's that's when you really understand what a community means and what it doesn't. But I do think that I have an incredible optimism and attachment to my country, particularly long term. And what I plan to do, even after this new book coming up is done, is actually do something just more on the foundation side of simply alerting America to what kinds of issues we have to deal with. It's more than just our petty internal problems, right? We have a mission in the world. We have a role in the world. Our country stands for something. We've inherited this magnificent legacy, and we owe it to ourselves and our children and grandchildren to pass it on. And I'm very optimistic that we will, after navigating this period, pass it on, refreshed, and rebuilt. But I think the underlying impulse, what this country stood for and still stands for, will continue to be viable. So again, I'm a big long-term optimist, Adam.
Well, very well said, and I very much appreciate you underscoring the long-term optimism of your view, because it even gives those of us who might not see it faith to just say, okay, well, look, if Neil sees it, I can trust in Neil, right? What I love about what you said, though, is yes, totally understandable to say, hey, look, how do I kind of just focus on me and mine and making sure that I'm not I'm as least damaged by what might happen here as the old order crumbles. But I think we have both a responsibility, but also an opportunity to ask ourselves, what role do I want to play in the new order? Like, how can I actually be part of something constructive and good that comes out of this, right?
And your kids, and being proud of what they do, and urging them to be part of this, be part of something constructive, not just try to hunker away or try to avoid everything. Look, we only have one life to live, and you either live it in a way that means something or you live it in a way that doesn't mean something. And I think let's make it meaningful. Obviously, trying to prevent damage to ourselves, damage to our family, absolutely, but also trying to extend ourselves in helping our national community come out better than it was before.
Well, that's a great way to end it, and a call to action. I would say even a call to greatness, and that's a privilege to be able to step into something like that. So seize it, right?
Yeah, exactly.
All right. Well, look, Neil, can't thank you enough. I do want to say, even though we live on pretty much opposite sides of the country here, I feel very fortunate to consider you as part of my community here. And obviously, anything I can do to help you out and add wind to your sails, but also just as any fourth turning curveballs come along, I'm one of those guys you can call at 3 a.m.
Well, send me your number, and I will. No, I mean, let me send me your number, and I might do that. I envy you for where you live. Again, some of the most special moments of my life was, cruising down early, 4 or 5 in the morning, down. What is that highway that goes down that goes through Independence and Lone Pine and that side of Nevada? I think it goes into California a little bit. You know what I'm talking about?
I do, and there's actually
Mono Lake. It goes around Mono Lake and
yeah, there's 2 different numbers, interstate numbers, that are coming to my mind.
Could it be 89?
Well, there's 80 that goes east-west.
That's the big
I don't
one.
know. I'm gonna forget it, so I'll butcher it. But anyways, let me put it this way, Neil. I am completely serious to say that if you ever want to come out here and revisit some of the places you've got the best memories of, or go explore new ones, I'd love to do that with you.
Yeah, that's something. Let me think about that. All right.
All right, my friend. All right. Well, look, thanks so much again for everything. Look forward to having you back on again in 2026, whenever you want to come back on, especially when your book's available for pre-order. But can't thank you enough, Neil.
Absolutely. Thanks so much, Ed.
All right. And everybody else, thanks so much for watching.
China has bought much more gold than the official transactions tell you. They're not reporting out of their gold buying, and right now this weekend, in fact, at the SCO meeting, the Shanghai Group, we had basically unification, which is incredible and very dangerous for the U.S. But India and China and Russia. Now they're the best friends after this meeting this weekend, and we always try to prevent them from putting an alliance together. What would happen right now, for example, if these 3 nations having 36% of the world's population say, we don't need to trade with the U.S. If they want to raise our tariffs to 25 or 50%, we don't have to trade with them at all.
At the 2025 SCO summit, India's Prime Minister Modi met with Xi Jinping and Vladimir Putin, signaling warmer relations. China, Russia, and India strengthened ties in response to U.S. tariffs and Western pressure, presenting the SCO as a rising economic bloc independent of Western institutions. Together, these nations represent 36% of the world's population, giving their partnership significant economic weight. With China secretly stockpiling gold and reducing reliance on the dollar, this alliance highlights a global power shift and exposes U.S. vulnerabilities in trade and finance. A 49-year veteran market expert, Bert Doman, recalls that since 2007, market manipulation has become much easier due to the removal of the uptick rule, which had been in place since 1933 to prevent short-selling abuse. Its removal opened the door for high-frequency and algorithmic traders to heavily manipulate markets. Many believe the SEC protects investors, but in reality it often protects insiders who benefit from such moves. This makes rallies risky, as they can be engineered, and safer bets like gold and silver have offered better returns during uncertain times. Looking at history, gold peaked at $800 in 1980 before entering a 20-year bear market, just as cycle studies had predicted, Bert Doman says. The bottom came exactly in 2000, aligning perfectly with long-term trends. Analysts had already forecasted back in 1980 that after this cycle, gold would begin a powerful secular bull market. Unlike shorter cyclical swings, a secular trend is long-term, and the current rise in gold is part of that ongoing secular bull phase. As we play snippets from the video, kindly click the like button, subscribe to our channel, and enable the notification bell to receive fast alerts whenever we post a new video. I appreciate your support. Have fun watching the video.
No, with the manipulation today, it's easy to be wrong. For 48 years, we basically called most market tops within a day or two. Okay, and that is using advanced technical analysis. It's become tougher since 2007. In 2007, they made it possible for the high-frequency trading and the algo traders to sell short without waiting for an uptick. We had the uptick rule in place since 1933. It was Joe Kennedy, who was a big manipulator in the 1929 crash. He and his guys crashed the market in 1929. And then they made him head of the SEC. And he said, well, if we would have had an uptick rule in place, we could not have manipulated the market downward. That means that if you put an order in to sell short, the order before that had to be on an uptick, a higher price, even if it's only at 1/8. And so that uptick rule was in place in 1933. And in 2007, they did away with it quietly. And we read it and said, oh, something is up. There's going to be a crash next year. And they want to make a big money out of that. And of course, we had the crash in 2008. So this was all manipulated. People have no idea. They think the SEC is there to protect them. No, the SEC is there to protect their friends. So a lot of money is being made with these manipulations. And so the up move in early April in the stock market, we said that it's going to be a bear market rally, but we'll probably have a couple of the indices making new highs by a small amount. But we don't want to play this. This is too dangerous because it doesn't necessarily have to happen that they will go as far as a few indices making new highs. So we sat that one out. Yes, we could have made a lot of money in that rally, but we had gold and silver and they made a lot of money for us. And then you asked about gold before. In 1980, gold had hit $800 an ounce. Okay, so we were along for the whole ride from 1977 onward. 77 is when I started my business, and so we were along for the ride. But then we got a sell signal on our indicators. We said, "Okay, time to sell, take profits." It's been fun, and then we did a cycle study on gold going back 400 years. So that was about 200 years in the U.S. and 200 years we had to go to the data from Britain. And so we said, okay, this is going to be a 20-year bear market in gold. People thought that was crazy because everybody was still waiting for $3,000 gold at that time. But it happened. When was the bottom of that bear market? Year 2000, exactly 20 years after 1980. And it was amazing to us even because usually cycles, they move a little bit to the left or to the right, they're off by a few years and so on. But the bottom was in the year 2000. And, people want to know what the second part of the cycle study said is how far the next up move would be. So far, it's correct. Okay. Mm-hmm. So we said in 1980 how high this market would rise, the current bull market. It's a secular bull market. You always have to differentiate between a cyclical a bull and bear market and a secular. Secular is very long term. Yeah.
Bert Doman point out that in the first phase of a market crash, investors facing margin calls sell whatever they can, including gold and silver, causing their prices to drop temporarily. But once that urgent selling is over, gold and silver rebound strongly as people seek safety while central banks print more money, eroding its value. That's when these metals shine as the only true protection of wealth. At the same time, India's warming ties with China and Russia at the SCO summit mark a shift toward a multipolar world, as the three nations, representing over a third of the global population, find common ground against Western dominance. Analysts warn that U.S. tariffs, especially on India, may be backfiring by driving these countries closer together. If they retaliate with tariffs or reduce trade, U.S. supply chains and retail sectors could face major disruptions, underscoring America's vulnerability in this shifting global balance. Now, let's recall the interview.
See, in the first part of a bear market, when the markets just tumble, and everybody has to scramble because they're getting margin calls. So they sell what they can't sell. And gold and silver, of course, it does have bids, and then they will sell that too. And in the first phase of a decline like that, gold and silver will be declined because it's being used as a source of cash. To meet margin calls. But then comes the second phase, and that is when all that is, urgent selling is out of the way, and that is when you really want to buy gold and silver. That second phase, because then everybody goes to safety. And gold and silver is considered the only safe thing, because the central banks then will step on the accelerator, manufacture as much money as they can, as they did in the year 2020, 2021. And that means that your money is worth less. The purchasing power of your money declines, and the only safety for that is gold, silver. Mm-hmm. They will go up. So gold and silver, gold has been an island of safety for thousands of years. It's not going to change. I think they know what's going to happen, what is inevitable. China has bought much more gold than the official transactions tell you. They're not reporting all of their gold buying. And so right now, this weekend, in fact, at the SCO meeting, the Shanghai group, we had basically unification, which is incredible and very dangerous for the U.S. But India and China and Russia, now they're the best friends after this meeting this weekend, and we always try to prevent them from putting an alliance together. Now they are the best friends. Now this is together, these three countries have 36% of the world's population. That is a big amount, 36%. Do you know what the U.S. is? U.S. is 4.1% of the world's population. And this is where Mr. Trump is so wrong. Mm-hmm. He thinks that everybody needs the U.S. consumer. Okay? He's wrong. What would happen right now, for example, if these three nations having 36% of the world's population say, we don't need to trade with the U.S. If they want to raise our tariffs to 25 or 50%, we don't have to trade with them at all. We don't need their consumers. We've got enough consumers outside of the United States. And in fact, we don't even have to do anything more. We don't even have to supply them with our stuff. We're just not going to even sell to the United States. Can you imagine if these three nations suddenly decide not to sell their stuff to the U.S.? The shelves at Costco and Walmart, etc., Target, they're going to be bare, you know, because you take a look at all the merchandise you see on those shelves, turn them upside down and see where they're made. They're made in these three countries, most of them. So I think we are much more vulnerable to them boycotting the U.S. than us boycotting them.
Both Bert Dohman's market insights and the geopolitical shifts seen at the 2025 SCO summit point to a world entering a new phase of financial and strategic realignment. As gold and silver continue to prove their long-term resilience, the strengthening alliance between China, Russia, and India adds another layer of pressure on U.S. dominance. These converging trends suggest that investors and policymakers alike must prepare for an era of heightened uncertainty and rapid change. Could the growing China, Russia, India alliance accelerate the decline of U.S. financial influence? Will gold and silver remain the most reliable safe havens as global markets face manipulation and geopolitical upheaval? If you like the analysis, then share your thoughts in the comments below. We'd love to hear from you. If you found this helpful video, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.
We're moving into a new digital system. I believe that this will now usher in the hyperinflation to burn off the debt that's being created. So we'll have Amazon stable coins and Walmart stable coins and Kmart stable coins and, JC Penney, as well as JP Morgan, as well as Hong Kong stable coins, the yuan stable coins. So it is an extraordinarily fragmented market, but they are thinking that within the next 2.5 years, by 2028, they will go from about 125 billion stable coins to $2 trillion in stable coins.
Stablecoin adoption is accelerating, with issuance doubling to $250 billion from $120 billion. Offering a more tempered outlook, JP Morgan estimates the market may reach $500 billion by 2028. Meanwhile, forecasts suggest the market could grow to $400 billion by year-end and $2 trillion by 2028, citing limited mainstream adoption and regulatory challenges. Yet, only 6% of usage is tied to real-world payments, while most remains in trading and DeFi. The Genius Act is shaping regulatory clarity, boosting institutional interest as major players like JP Morgan, Amazon, and Walmart explore stablecoin models. Analysts see them becoming core payment infrastructure, bridging fiat and digital money in a hybrid financial system. The speaker, Lynette, the chief market analyst at IDM Trading, argues that silver and gold are massively undervalued compared to their true historical ratios and fundamental worth. Based on a traditional 20-to-1 gold to silver ratio, silver could be valued between $1,300 and $2,000 per ounce, while gold's fair value could range from $33,000 to $40,000. Current spot prices are seen as artificially suppressed by paper derivatives, but since both metals are sound money, they cannot be inflated away like fiat currencies. In times of crisis, gold and silver act as a bridge, preserving purchasing power as overvalued fiat-based assets, and real estate collapse, enabling wealth transfer to those holding real money. Looking ahead, Lynette warns of inevitable hyperinflation as currencies lose credibility. In such scenarios, governments historically revalue gold to restore public trust, often after lopping zeros off collapsing currencies. While gold and silver prices would soar during hyperinflation, gold has historically held elevated value longer than other assets before being adjusted, only to climb again under the new system. This pattern, repeated throughout history, is expected to play out again. As we present clips from the video, firstly, please click the bell symbol and subscribe to receive updates on our latest uploads. We always value your thoughts and feedback.
What happened in 1980 at that $50 mark, I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to 1 that historically we were. These were both, well, it's a peace dollar. Okay. These are both $1, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at $3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between $1,300 and $2,000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. They can manipulate what you see through the use of garbage derivatives, but they cannot inflate it away. The point is they are both money. They're just the opposite sides of that money coin. And as this loses more and more and more of its purchasing power value, these go up in nominal terms. But what they really do is they create a bridge, because when one currency goes away, another one comes in. It's just that you need something and I need something. We need something that will hold its purchasing power intact to get us from one system into the next system. And dare I say it, even have the ability to take advantage of the opportunities that will present as these extremely severely overvalued fiat money assets. And real estate is actually not pure fiat money because it is a tangible as well, but it's severely overvalued. That's going to flip flop. So if you can hold your purchasing power intact, you're going to be able to have that wealth transfer your way. Well, I personally do not see it. I see it as inevitable, because what gold really does is it regains confidence. I mean, they want us to think that gold is an old relic, except wedding rings are generally in gold. Good as gold. It's in our vernacular. It's in our DNA, and it's used to regain public confidence after that massive failure, which I believe we are like this close to experiencing, and the hyperinflation. But make no mistake, every single country has a gold revaluation account. They're not going to do it at these levels because it does not reflect all the paper money that's been issued. So what I think we will see, and it's just a repetition of history, because this has happened over 4,800 times. I don't think this time is any different. And that's really what the point is. But they have to, you have to kind of back up to move forward. If they did it now at the artificial level that the spot markets are, then it wouldn't have as great an impact if they wait until they finish blowing up the currency in a bout of massive hyperinflation. And what they do then is, of course, they lop off zeros so people think, well, they've got this under control. So you've got a loaf of bread. And I know this sounds outrageous, but it's not outrageous. It is just a repetition of history where a loaf of bread might go for, as it enters hyperinflation, a loaf of bread might go for $80,000 a loaf, right? But then what happens? They lop off 3 zeros or 4 zeros as they do that overnight revaluation. And so it goes from $80,000 a loaf to $8 a loaf. But so do your savings. And so do anything that you've accumulated in fiat. And frankly, so will the nominal price of gold. First, it'll go up massively, right, in the hyperinflation. But the difference between, say, your stocks and everything else, that drops dramatically immediately upon the revaluation. Whereas gold, it's on average, so I can't guarantee this, but on average will stay up at that level for about 9 months before it too gets revalued, but then it instantly begins to climb again in terms of that new currency. So that is what I anticipate seeing. I don't anticipate seeing it before we do hyperinflation, because there is not yet the need to regain that public confidence. But I watch that like a hawk, because that, my friend, is the only thing that's keeping all of this stuff together.
The $50 silver level from 1980 remains important because it highlights how heavily manipulated these markets are. Just as gold and silver were once taken from the public and openly admitted to be manipulated by governments, today's spot prices don't reflect true price discovery, with LBMA inventories dropping sharply before partially recovering, while silver holdings remain much lower. This underscores silver's dual role as both an industrial and monetary metal, making it more vulnerable to hidden maneuvers. ETFs like SLV also expose this manipulation. Their structure was altered so they no longer need to back shares with actual silver. That leaves ordinary investors holding paper claims, while powerful players like JP Morgan or Saudi Arabia could still take delivery of the physical metal. This setup creates a backdoor way for institutions to control silver supplies, while the risks and losses are pushed onto the public, who falsely believe they own real silver through these trusts. Let's shift our attention towards the interview.
Yes, I definitely do think that triple-digit price. Now, one thing that you mentioned about 80s with the Hunt brothers accumulating silver, because they wanted to leave the U.S. and form their own little country in Texas. However, the importance of that should not be just trivialized or ignored, because what we were really dealing with was an overt manipulation by our government of the silver markets. And everybody was warned. And I have to say, Jesse, I have often wondered when these things that happened and they seem outrageous to me, like taking the gold away from the population, like taking the silver away from the population, like a sitting president admitting that they're going to manipulate the markets. And I used to wonder how they could get away with that, why people didn't rise up and say, no, you can't do that. That's crazy. Well, I think we're living through that right now. And I'm seeing it happen. I think there's a lot of blindness that's going on. So I do actually consider the $50 mark nominal, to your point, to a very valid point, because these markets are manipulated. They are admittedly manipulated. And so if anybody really expects there to be any level of good price discovery with spot gold or spot silver, and I always make sure I say spot, because that is just a contract. And when you're talking about silver, there's a chart from the LBMA that they came up, and of course we know that there was a huge rush of physical coming into America at the beginning of this year. And you can see the stores in the LBMA dropping in gold, dropping and then rising again and coming back pretty close to the levels that they had before whatever came out of the LBMA. I'm actually more interested in what came out of the BOE, but let's just stay with the LBMA for a minute, because the same kind of issue with the physical metal being shipped over happened with silver as well, but their stores are significantly lower than they were before that physical push into the US. So what does that tell you? It tells you that silver gets used up in industry. And just like the SLV silver ETF that is supposed to be a basket of silver, they couldn't put the basket together. So back in, I don't remember whether it was 21 or 20, but they changed the prospectus. SLV changed its prospectus so that they didn't actually have to pull a basket of silver in, but rather all they had to do, which is what they were designed to do anyway, which is imitate the spot silver market. I think we could see that because silver is the secondary monetary metal, but it is rather, I'm pretty sure that Saudi Arabia would be considered an administrator, which means that they would, you and I can't do it, but they would have the ability to take possession of the underlying silver. So I think that that is a manipulation to make that happen, because that can happen even more invisibly than what we were just talking about. And since silver is used across every single sector of the global economy, in solar, in medicine, et cetera, and gold is as well. Both of them are, but silver more so straddles that world. I think that this could also be a maneuver to ensure that they get their hands on the physical silver. At the end of the day, the holders of SLV won't. I mean, the normal holders of SLV wouldn't, but JP Morgan would and Saudi Arabia would. So I think it's a backdoor way to do it and have control of it. But the real problem is it would have to be done strategically. Like I'd be curious to see how much of a percentage of the holdings that they already have in silver that would actually represent. Because if they did take out the physical at the same time that SLV itself, that trust, is selling off bits of silver on a daily basis to pay the rest of the fees, the repercussions for the public would be huge. Those that think that they actually own silver with an SLV, they don't. They just own shares in a trust. But that could have some really significant significant impact on the risk transfer to the public.
The rise of digital currencies, the undervaluation of gold and silver, and the ongoing manipulation of precious metal markets all point to a fragile and shifting financial system. As fiat currencies weaken and hyperinflation risks grow, physical gold and silver remain the most reliable anchors of purchasing power, offering protection and opportunity during systemic transition. The real question is not if, but when this reset will force the world to rediscover the value of sound money. Do you think central banks will allow the public to benefit from gold and silver's true revaluation? How should ordinary investors prepare for a financial reset driven by digital money and precious metals? Please share your thoughts in the space provided for comments below. Please remember to subscribe to stay updated and to give this material a thumbs up if you found it helpful. We appreciate you coming along on the ride.
Confidence in the dollar is slipping, and gold and silver, with its long-term 5,000-year track record, speaking of 5,000, that's the number that we're getting out of Goldman Sachs if just 1% of the money that's in treasuries pulls out of treasuries. Bald Guy Money did an interesting one, and he said if 20% pulled out, he was getting 9,000 dollar gold. And wouldn't surprise me. And then they revalue it. The higher the price of gold goes, only benefits this country on many levels, not only through the devaluing of the dollar, but also, of course, the ability to, if Judy Shelton is right, peg gold to the back end of the treasury. What happens if gold keeps going? Put gold at $5,000 an ounce, like Goldman says, and divide by 70, and you got a lot. You got $350. Or put it at $5,000 and divide by 90, where we are right now, $55. The silver's going much higher.
Confidence in the dollar is fading, pushing investors toward gold and silver with their 5,000-year track record. Goldman Sachs says if just 1% of Treasury money shifts, gold could hit $5,000, and some estimates go as high as $9,000. If gold reaches $5,000, as some forecast, silver could climb anywhere from $55 to $350, pointing to much higher prices ahead. Andy Schectman, the president and CEO of Miles Franklin Precious Metals, points out that, similar to central banks, people might profit by diversifying into gold and silver as currencies decline. According to Goldman Sachs, if even 1% of U.S. Treasury funds move, gold might hit between $4,500 and $5,000 next year. In the meantime, the concerning job data indicate that full-time employment is declining, part-time and multiple job holders are increasing, and about 1 million jobs have probably been revised downward. Future rate reduction will cause margins to further shrink, making smaller regional banks particularly susceptible. As we play snippets from the video, please hit the bell to receive quick alerts whenever we post a new video, like this video, and subscribe to our channel. I appreciate your support. Have fun watching the video.
Pick used to say all currencies, fiat, are inherently meant to die. In essence, it could go to infinity. Now, I'm not saying that's going to happen, obviously, but, I just think that people could benefit from diversifying more heavily into gold and silver, like the central banks have. Goldman Sachs sees the scope for prices to move well beyond 4,000 as their baseline forecast for next year. And even beyond the 4,500 tail risk scenario. This is, again, no public participation, but if 1% puts their money in of privately owned U.S. treasuries, they're saying 5,000 an ounce. So I don't know. But I just want to hammer it home. If Trump lowers yields by 2 or 3% real yields, it'll be negative. Even by their numbers, big money will not stand for that. That's why they are front-running this. The world's largest players, the central banks, the global lenders, the corporations, the global lenders being the commercial banks, the ultra-wealthy, they've all been quietly repositioning. But once it becomes obvious that the public will realize that fiat money is eroding, is it too late at that point? I don't know. I'll leave that up to everyone else. A couple last things here. The jobs report. The consensus was that between 40 and 100,000 jobs would largely greenlight a 25 basis point rate cut. But we would need a massive, massive outlier for the Fed to cut by 50 basis points. Well, we got that outlier. The BLS reported that in August we only added 22,000 jobs, not the 79,000 jobs that were expected. But more importantly, June was revised from 27,000 to negative 13,000. It's the first negative print since 2020. They keep revising these jobs numbers. Remember what happened with July and August, those numbers. To the ugliest part, in my opinion, of the jobs report was the number of full-time jobs. They fell by 357,000 jobs. That's the second consecutive month of full-time job losses, while part-time jobs surged by 597,000. So you lost 357,000 full-time benefit-paying jobs, and you added 597,000 part-time. Kind of seems like people are working 2 or 3 jobs to make ends meet. It gets worse. The number of native-born workers fell by 561,000. to 132.474 million. This was the biggest drop in quite some time. At the same time, foreign-born workers increased by 50,000. The number of multiple job holders soared by over 443,000 to 8.785 million. This was the biggest monthly increase since COVID. And another indication of how stupid the jobs report in the Bureau of Labor Statistics. We should just pull the L out of it, and it should be called the BS. They continue to do this stuff. Now, next week, I think, is it next week? I think it is. They are supposed to revise job growth figures from early 2024 through early 2025. Forecasters have thought that job growth will be slower than previously thought. Now you're getting analysts saying revisions anywhere from 475,000 to 1 million jobs will be revised out. Originally the number was 1.76 million. They're talking about revising 1 million out of the 1.76. I think, let's see, I got maybe 2 or 3 more things left to say. I found it interesting that Trump says that the United States has lost India and Russia to China. And he said, may they have a long and prosperous future together. That's what he came out and said that. And maybe that's because both India and China confirmed to boost their ties to reduce the effect of Trump tariffs at the Shanghai Cooperation meeting. We're seeing insured deposits shrink out of the banks. In particular, the regional banks and the small banks, and a lot of money is finding competition with digital banks and stable coins. And wait till you see what happens with all these stable coins, with fintechs and stable coins offering higher yields and lower fees and instant transfers because they don't have brick and mortar, and they don't have ATMs and all this stuff. We're not out of the woods yet with the banks, and the more we start moving towards this digital system of stable coins, you're going to massively erode the stickiness of bank deposits, and which has been the foundation of bank stability. If the Fed cuts rates, banks are going to earn less from lending, but still need to pay competitive deposit rates, which squeezes the margins and makes the weaker regional banks more vulnerable.
Andy Schectman highlights that with significant institutional and individual orders as well as historic ETF inflows, there is a massive stockpiling of silver. Saudi Arabia and other major players may still demand supply even though SLV raises questions about manipulation. BlackRock has even cautioned that a short squeeze brought on by silver shortages might drive prices skyrocketing. Silver should already be far higher given the current price of gold. At historical ratios, it might be between $90 and $100 per ounce, and in the worst cases, it could even be $500 or more. Now let's redirect our attention towards the interview.
You're seeing the numbers in all of vaults except the LBMA, which is going the opposite direction. But yeah, you're seeing massive, we're seeing really large orders even in the retail side. We're just not seeing the huge volume. But 7-figure orders are no longer the exception at all. But yeah, you look at the COMEX numbers, there's a massive amount of hoarding. You look at the amount going into the world's ETFs, it's huge. So I hate that part of it, SLV, which is really a tool for manipulation because of the naked shorting. I would much rather see the money go into physical and drain. When you look at like Saudi Arabia, who took this huge position in SLV, the one saving grace is the position is large enough to where they can demand delivery. And it's like when the Texas Teachers Union, which was being run by Kyle Bass years ago, put $1 billion into gold. He took possession out of GLD. So, but just simply at face value, yes, that is true. The ETFs and many of the Western exchanges are seeing record inflow, not all of it leaving. And the numbers, the eligible numbers, are going much higher. But there is some leaving, certainly. But you're right. It is very obvious that there is a huge amount of hoarding. this will promote very possibly that short squeeze that everyone's been waiting for, because there's just not enough in the way of those size good delivery bars in the West to really to protect. In fact, even BlackRock wrote in the prospectus of SLV that be careful if you're short, because there could come a time when there isn't enough silver to cover those positions, and it's a big threat. Now you're talking a squeeze and the price goes up parabolically and bankrupts people. So ultimately, that would be where I think this is hedging or heading to. The first step would be taking huge positions and hoarding it, not selling it at prices anywhere near where we are now, because, just taking where we are right now, if you look at gold right now at 3640, call it, and if we divide 3640 even by 70, which is way higher, that's $52 right now. It should be massively higher than it is right now. And if you did it by the average, even call it 40 to 1, where it's been about 45 to 1 for the last 100 years on average, you're looking at $91 an ounce silver. Is that out of line? No. And at 45 to 1, it's still 7 times higher than it's coming out of the ground at. So, 91 times 7, in theory, $700 an ounce silver. I'm not saying that's going to happen, but I mean, is it the craziest thing to think of? If you take 34 or 3640 divided by 7, which is the geologic ratio, it's actually 520. So let's get a little bit more realistic. But $520 would represent the current geologic ratio. But what happens if gold keeps going? Put gold at $5,000 an ounce, like Goldman says, and divide by 70, and you got a lot. You got $350. Or put it at $5,000 and divide by 90, where we are right now, $55. Silver's going much higher, for sure.
A critical period for both gold and silver seems to be approaching, driven by mounting supply restrictions, central bank buildup, and waning dollar confidence. The outlook indicates that both metals may see significantly higher prices in the future because of the big positions taken by institutional and sovereign purchasers, as well as the possibility of a silver short squeeze. How soon might gold and silver hit these anticipated levels if central banks keep moving away from the dollar? Would a silver short squeeze primarily help long-term holders of actual silver, or could it cause more widespread financial market instability? In the space provided for comments below, express your opinions about Andy's insight. Please think about sponsoring us and putting on notifications if you think this video is educational so you can see our most recent videos. See you in the video that follows. I appreciate you viewing.